Hey everyone, Ian here with the weekly Winning Investor Daily Update. And the biggest question on everyone's mind right now, are commodities a sell? Is it time to get out of commodities? We've seen just incredible moves in oil and natural gas and wheat, nickel. I'm going to cover these charts in a moment. And the question everyone is wondering is it time to get out? Traditionally, when you see these super spikes in commodities, they're followed by sharp reversals. Commodities do not stay high for very long. The reason for that is that the cure for high commodity prices is high commodity prices. What do I mean by that? Well, if the price of oil is high, it's going to encourage private companies to add, and countries, by the way, and to add more oil supply to the market because they want to sell more when prices are high. And as they add more supply, the price comes down. So I want to take a look at a bunch of charts right now. I'm going to walk you through exactly what I'm seeing in these markets and then talk to you a little bit about the oil futures curve and make it as simple as possible to understand. So right now you're looking at a picture, a chart of the price of oil. And each of these candles represents 1 day of trading. You can see this one goes back. Let's rewind all the way to early 2021. So back then, after the coronavirus sell-off started alleviating, the price in January 2021 was about $35 to $40 a barrel. We had a very strong uptrend throughout 2021, a little bit of a sell-off here in the fall. But then as 2022 started, you started to see oil break out to new highs. It broke through the $84 level that it hit in October and was grinding up. Whenever you see these breakouts and a grind up pattern, this is a technical, you wind up at some point with this blow off top. And what does a blow off top signify? Well, it means that there's a different type of buyer that entered the market. Now, let me repeat that. This is important. When you see a chart change like this from this grind up to when it just starts to gap up, it means there's a different type of buyer in the market. And the type of buyer that buys into this is two things. One, it's the Johnny come lately person that always buys things at the highs. And I'm sure everyone has a friend like that, or maybe a family member. And other person that is buying at any price is a short that wants to cover their short because they're losing money. And we're seeing other things happen in markets as well. Now, wheat market has gone crazy in the last week. It's up about 50%. Oil markets, I think, is up 40%. The wheat market is exploding higher, and so is the oil market, because Russia and Ukraine sell 30% of the world's wheat. They also make fertilizer and potash, things that we need to grow our crops. So traders are anticipating low supply of wheat in the future. And so that's why they're buying it up now. So we saw this huge super spike. Another reason why we're seeing the super spike is that a couple months ago, the oil curve went into something called contango. And when it's very rare that it goes in contango, what it means is that each of these, the oil curves has different futures months that settle. And when the price of the front month is below the price of further out on the curve, back months is what they call, it goes into what's called contango. And that means the oil market is oversupplied if traders are willing to pay more for oil in the future than they are now. Now, the futures market has flipped that. We are now in what's called backwardation, very steep backwardation. It means that the front end of the curve, where the spot price is now, is about 115 to 120, or at least it was on March 4th when this curve was created. The back month is all the way down to about 70. So 60 to 90 days out, you're looking at much lower oil prices. And why is this important? Because producers, companies that are drilling for oil, have to hedge their production risk in the futures market. And if you're a large multinational oil company and you are thinking about adding to production, and you realize that the price of opening up a new well has significantly gone up because everyone is rushing to do this at the same time. But then you look at where you can actually hedge your risk at, it's significantly lower from where the price of oil is now. So it means that these companies, these oil companies that are bringing new oil and supply onto the market now, it's not going to have as high margins in the future as it does right now, and is also an impediment for them adding new supply. But I think that the most important thing that's happening right now in the oil market is that the buyer has changed. The buyer was a grinder higher, and now the oil market, had a classic blow off top. Now, it might get worse. I mean, we could see a prolonged Russian invasion into the Ukraine that lasts months, maybe years. We could have oil trade at an elevated price from now, into the future. I do think that countries like Saudi Arabia are going to increase production. The U.S. companies are going to increase production, which will eventually bring the price lower. And if you're a trader, it's always good to sell into these price spikes, especially if you are long for the grind up. I want to cover one more market because this is just an incredible move. Nickel this week, and nobody really uses nickel. I mean, we use nickel for sterling silver. That's about it. There's copper in nickels right now, and that's not even a big use case. We just saw an incredible short squeeze where the price went from 2,000 up to 5,600. It tripled in one day on people who are short having to cover their short. It was a technicality. One other use case for nickel, obviously, I know you guys are going to say, I forgot this, is you do use nickel in electric vehicle batteries. So that is another use case for nickel, although you don't use as much as you do copper. But I think that this technical move in nickel was just based on the short squeeze, and we'll see this reverse where it gets to a price where demand starts to meet supply. So that is it. Any questions, please feel free to leave us a comment below. We'd love to hear from you. If you like this content, please hit the like button. That allows us to share our content with other people on the YouTube. And other than that, have a great week, everyone. Thanks for tuning in, and we'll speak to you next week. Take care.